Welcome to part 2. In this video I am analyzing Bajaj Finance with Mahindra and Mahindra Financial Services and Aditya Birla Capital. Earlier I had mentioned that I would do it with HDFC, AMC and GM Financials, but after looking at the company profiles I saw that they are not exactly comparable. Therefore the best that I could find in comparison with Bajaj Finance was Mahindra and Mahindra and AB Capital. So this is a peer group comparison. After this we'll do the technical charts and the intrinsic value calculation. If possible, we'll also look at the cash flow statement. Some of these ratios I will not be looking at strictly, and I may skip few of these ratios. The current market price is 3,400 for Bajaj Finance. Mahindra and Mahindra Financial Services is trading at 130 and AB Capital is at 68 rupees. Let us see how much these scrips have fallen from their 52-week highest point. That is, in the last 1 year, what was the highest point it had reached, and from there how much it has fallen. Bajaj Finance has fallen 30%, the lowest from when compared to the other two companies. Mahindra and Mahindra has fallen 47% and AB Capital has fallen almost 40%. So almost all of these three companies have seen a substantial fall from its highest point reached in last 1 year. The results are up to date till June 2020 for all the three companies. Let us look at the latest quarterly sales figure or revenue generated in the latest quarter of June 2020. This is in comparison with YOY, that is to its previous year's quarter. The latest sales figure for Bajaj Finance is 6,600 crores. Compared that with the previous year quarter, it was 5,800. So that's a 14.52% increment in revenue over YOY. Mahindra has also seen 8.32% growth in its overall revenue generated from its previous year's quarter, and AB Capital has also seen a higher revenue of 10.6% compared to its previous year. So all of these three companies have done well in terms of generating higher revenue compared to its previous quarter. Next we'll look at the net profit, again YOY quarterly. Bajaj Finance has seen a 20% decrease in its overall profit generated from its previous year. In the previous year of the previous quarter, it was 1,195 crores, and in June 2020 it has earned around 962 crores. That's a almost 20% drop in its profits. Mahindra has seen a increase in its profit by almost 100% from 107 crores to 432 crores. So here what could have happened is, in the previous year's quarter the overall profits must have dropped and now it has come back to its normal level. So if this any values which exceeds more than 20-25% in growth rate, that needs to be checked individually by going and looking at the values instead of percentages. AB Capital has also seen around 26% drop in its overall profit margin, rather the profit growth rate from its previous year's quarter of from 270 to 198 crores in the latest quarter. If we look at the 12 months sales figure compared to the latest year, that is 2020, with the recent 12 months, the overall growth in sales is around 3.2%, a minor growth in Bajaj Finance. Mahindra has seen a quite substantial growth rate. So if somebody is interested in investing in Mahindra and Mahindra, then they will need to go and check why there is such a high variation in terms of revenue generated in the recent 12 months compared to its latest sales values. All these data have been sourced from screener.in. So we'll have to check for if there are some errors in this, then that needs to be rechecked. But as of now I'm analyzing Bajaj Finance with, that's the main focus right now on the analysis rather than Mahindra and Mahindra. So if we see a variation in the values from its normal trend, then that needs to be investigated as to why there is this huge variation in Mahindra and Mahindra in terms of revenue generation. AB Capital has also seen a minor growth in its sales from its previous 2020 year 2020 of 2.3%. Next, we'll look at the entire year's profit with the recent 12 months. Bajaj Finance has seen a 4.5% degrowth in its profit from 2020. So in the recent 6 months, or rather 3 months till June 2020, the profits have seen a slight decrease to 5,031 crores compared to 5,265 crores in March 2020 or up till March 2020. Mahindra has seen a huge increase in its profit, like sales figure as well as the profits have gone up by almost 100%. So again, this needs to be investigated separately by looking at the values. Aditya Birla has seen a drop in its net profit by 7.9%. Next, we'll look at the comparison of net profit of the latest year with the cash flow from operations. Again, this cash flow from operations will not be strictly comparable or understood, because generally there will be cash outflows in NBFCs. So we'll just try to understand individual line items instead of looking at the percentage. So we'll only look at the first two items, net profit and the cash flows. How much cash flows, how much cash is flowing out of the operations and how much profit it has declared in that year. So on a profit of around 5,265 crores, there was a cash outflows from operating activity of around 24,000 crores. Compare that with Mahindra and Mahindra, profit of around 1,074 crores in 2020 and the cash outflows of around 3,115 crores. Aditya Birla's net profit is lower at around 926 crores and a cash outflow of cash inflows of 4,165 crores. Again, this needs to be investigated as to why there is positive inflows through cash from operations in Aditya Birla. Some of these businesses may be generating higher cash inflows than outflows, and therefore it may be positive, but this needs to be analyzed and investigated separately by looking at the cash flow statement. Next, we'll look at the valuation ratio, price to earnings, price to cash, price to book, and then price to sales. Price to earnings of the last 5 years and 3 years on average was around 29 times and 34 times. If you don't know what price to earning is, I have a separate video on price to earnings, a very small video. You can look at that and understand what price to earnings is. Basically what it means in short is that what is the price we are paying per share based on the earning done by that share. So this here we are paying 29 times on an average. If someone wants to buy, they'll have to pay 29 times more than the profit earned by the company. And in last 3 years it was trading at around 34 times higher than its earnings. The latest price earning is around 41 times, so it's quite high. So this is valuation wise, this has gone up way too high, and we need to wait for it to come down at least to 34 to its average, or even 5 years average of around 29. Here in this range we can accumulate between 34 times and 29 times its earnings. So this is the average, and the average gives us a good price point that we can decide as our starting point of investments. Never rush into buying quickly or at high valuations. Always wait for valuations to drop. Mahindra and Mahindra is trading below its both 5 years and 3 years averages of 15 times and 14 times. So currently it is available at a good price to earning multiple of around 13.4 times. Aditya Birla is also trading below its 5 and 3 years average of around 24.6 times. Currently its price is available at 19.4 times higher than its earnings. So all of these three companies, especially Mahindra and Aditya, they are trading at a reasonable valuation below 25 times, which is my benchmark, whereas Bajaj Finance is expensive in terms of price earning. In terms of price to operating cash flow, we'll skip this and we'll look at the price to book. Again, Bajaj Finance is very expensive at 6.4 times its book or net worth, and therefore we need to either look at its average of the last 5 years, that is price to book of average 5 years, or last 3 years average price to book, and then maybe time our entry in such a way that as and when the price book comes to that average, we can buy into this company. As we already analyzed earlier in the earlier video where I checked out the financial statement, we saw that the company was very good in terms of managing its assets and everything, and therefore once the valuation is correct, that time we can time our entry. Mahindra is quoting at around 1.3, Aditya Birla is also quoting at around 1.3 times its book. So both of these are available at good valuations. And if we want to invest, if somebody wants to invest in Aditya Birla or M&M, then we will have to analyze the financial statements separately and then look at the ratios and peer group comparison, and then make up our decision as to what we want to do. Price to sales, again Bajaj Finance is very expensive at 7.6 times, that is its price is 7.6 times higher than the sales it has done per share. So this should be somewhere around 4, 5 or max 6 times its sales. We should not pay very high price for a company against its sales done per share. This is a very good valuation ratio which tells us how expensive the share is based on the sales it is doing on individual shares or per share basis. Mahindra is available at 1.3 times its sales, so it's very reasonable in terms of whatever sales it is doing. Based on that, the price is just 1.3 times higher than the sales of 2020. AV Capital is exactly available at 1 times its sales value. So whatever sales it did in 2020, the price is also around that per share. So reasonable valuation, at least for AB and Mahindra and Mahindra Financial Services. Next, let us look at the enterprise value, and against that, what is the EBITDA it is earning every year. This is also one of the valuation ratios that help us understand how expensive the stock is. Compared to the EBITDA it is earning, the company's enterprise value is 19.7 times higher, which is expensive. Mahindra and AB Capital are at a reasonable 10 times and 12.1 times its EBITDA. The PEG, which is the price earning divided by the profit growth of 5 years, this should be around 1.5 or below 1.5 and above 0. So this shows us that whatever price earning we are paying, if the profit is also growing at a very high growth rate as compared to the price earning, then that's justified. So earlier we saw that Bajaj Finance was quoting at around 41 times its price to earning, and but when we look at the profit growth rate of the last 5 years, which we can see here at 42%, 42.4 and 42.1% in the last 5 and 3 years, we see that it is very reasonable. Now when we look at the price earning individually, that shows us that it's very expensive, but when you compare it with the same price earning with the profit growth, then it becomes justified that we can pay that much price earning for this company, because the profits are also growing at a phenomenal rate of 42% from both last 5 and 3 years. Mahindra's last 5 years growth rate in terms of profit has decreased quite substantially to 3.3%. So this price earning, even though low for Mahindra and Mahindra, earlier we saw that it was trading at a low price earning multiple, but when you look at the growth in profit, it is not there, and therefore it becomes very expensive. So the PEG gives us a very good viewpoint of the price earning by comparing it with the profit growth. So Mahindra and Mahindra at least is expensive even when compared to Bajaj Finance, because it doesn't have growth in its profits from last 5 years. Although in the recent 3 years at least there is a growth rate of around 28%. So that at least gives little confidence that the company's sales are still intact, at least in the last 3 years, or it's growing at a good rate of around 28%. Aditya's PGs are also good at around 1 time, and 0.9 in the last 5 years. So all of these three companies are trading at a good PEG, except for Mahindra in the last 5 years, where the profit seems to have dropped. The growth rate in the profit has dropped to around 3.3%. Sales wise, both Bajaj Finance and Aditya Birla are growing their revenues at a very high growth rate of about 35%, whereas Mahindra's revenues are not growing that faster as compared to Bajaj and Aditya Birla at around 14 and 18.6% in the last 5 and 3 years. So we want the revenues to be growing at a good rate. Return on equity is the highest for Bajaj Finance, and that is why it is getting a high valuation as well. That is why we see that its price to book is so high, price to sales is very high, price to earnings is very high. So people are ready to pay a high valuation because it is also earning a good return on the amount of net worth it has on its books. So last 5 years and last 3 years, if we see there also, we see that ROE is quite high at about 20%, and even in the recent 2020 it has earned around 20%. Mahindra is, at least in the latest year, has seen a drop in its ROE below 10% of 9.3, whereas its last 5 and 3 years average was 12.3% and 13.4. So the more the ROE, more the profitability ratio on the net worth or on the capital employed, the more the valuation the company would get generally. And that is quite acceptable, because if the company is earning good profits or margins on its capital and everything, then it should also get a high valuation in that sense. AB Capital's valuation ROEs are very low, and in fact in 2020 the ROE is also fallen below its average, along with falling below 10%. So there are some pressures on both of these companies. Return on capital employed measures what is the profit the company has generated on the total source of funds that it is holding in its balance sheet. The highest again in terms of ROCE was for Bajaj Finance of about 12%, and we also see quite a trend in Bajaj Finance, where almost last 5 years, last 3 years, and even in the latest 2020 it has earned around 12% approximately and slightly above in the 5 years average. So although the latest has fallen below the average, but it's still very much nearby it. Whereas Mahindra and Mahindra as well as Aditya Birla have seen their 2020 ROCE values falling below its averages, which is basically a kind of indication to us that there is some pressure, margin pressure on the company's books. So we need to be a little alert as in when we see these kind of data where the recent years margins are having pressure. But when we are investing for 3 and 5 years, we should look at the long-term trend also and see if that also is low. If that for last 5 years and last 3 years the values are low, then that needs to be considered as a red flag, and maybe we can get out or reduce our exposure in that company considerably. Return on total assets looks at what is the balance sheet size and all the assets that the company has, and on that what is the profit it is generating. Again here too we can see that 3.7% in the recent 12 months, and in the last 5 years it was earning around 3.6% on the total assets, and this is considered good because these companies, financial companies, have a huge balance sheet, and therefore the ROA would be considerably low. Mahindra is earning just 1.5% in all of its total balance sheet size, whereas in the last 5 years it was earning around 2%. So again the ROA of recent 12 months is below its average. AB Capital is earning slightly above its average of the last 5 years on its total assets, whereas Bajaj Finance is almost earning twice of what the other two companies are earning. We'll ignore the asset turnover, the inventory turnover as well. Let us look at the last 5 years total net profit earned and how much operating cash inflows or outflows happened in the last 5 years. We'll ignore the third option where we are looking at the percentage. So in the last 5 years, the total profit earned by Bajaj Finance was around 14,000 crores, way above the other two companies. Mahindra has earned around 5,300 crores and Aditya Birla has earned around 3,500 crores. Operating cash outflows in the last 5 years was 94,000 crores for Bajaj Finance, whereas for Mahindra and Mahindra it was 35,000 crores and AB Capital at around 34,000 crores of cash outflows of operating nature basically. So we want the companies to be spending out more and more cash through its operating activity, because that's its lending activity. Earlier we saw that in the latest 2020 year, Aditya Birla had a positive cash inflows rather than outflows, but over a period of last 5 years we see a negative, that is the cash is going out in terms of its lending activity. Next, let us look at the operating cash. These ratios we'll ignore for time being. We'll also ignore these ratios because they will not make sense for a financial company. Let us look at their operating profit margin. Generally these companies have a high operating profit margins because most of their major expenses is not of operating nature but of interest expense, and therefore we'll see a very high operating profit margin. But Aditya Birla has seen quite a low operating profit margin of just 39.5%. So this needs to be investigated again separately. Net profit margin of the last 5 years on an average, again highest we see is Bajaj Finance at around 19.4%. This is the net profit margin it is earning on average every year since last 5 years, whereas M&M and AB Capital are earning around 12 and 8.1%. In fact, AB Capital has seen even higher margin pressures over the last 5 years on average. My minimum average NPM margin for a company should be at least 10% and above. This is the bare minimum that I expect these companies to earn on the total revenue it is generating. If you look at the latest 2020 margin, Bajaj Finance has done very well at around 20%, whereas M&M and Aditya Birla has even seen higher pressures over its 5 years average. So M&M's overall NPM margin in 2020 has fallen to 9%, which is below my benchmark of 10. And AB Capital has also seen a very high margin pressure of 5.5% only in 2020. Compared to its average, it has fallen way below that, and that is basically an indication of a margin pressure on the company, and therefore we need to be alert, at least not add more into it in terms of averaging, or maybe even reduce the stake to a substantial amount so that we don't get stuck into this stock more and more and more. Let us look at its market capitalization. Currently Bajaj Finance is available, the entire company, if somebody wants to buy, it's available at around 2,06,257 crores. Compare that with M&M and AB Capital. These are very small companies in front of Bajaj Finance in terms of at least market value, at around 16,000 crores, both at around approximately 16,000 crores. Net worth wise, this is the actual way we should be looking at in terms of what is the actual value of the company, not in terms of market capitalization but in terms of equity. But both are equally important. So net worth for Bajaj Finance is around 32,000 crores, and Mahindra and Mahindra and AB Capital both are available at around 11 and 12,000 crores in terms of net worth. Let us look at the contingent liability. What is the position? All of these three companies being NBFCs, therefore they wouldn't have a very high contingent liability. This is 7% for Bajaj Finance, that is its contingent liability is just 7% of its net worth, and therefore it's safe. Even Mahindra is at around 10% and AB Capital at 9.5%. So all of these three companies have done well in terms of holding contingent liability below 20% of its net worth. Bajaj Finance debt to equity ratio currently stands at around 4 times, the lowest in the group, Mahindra and Mahindra at 5.5, and AB Capital at 4.5. So all of these three companies have done well in terms of debt to equity ratio. Should not exceed more than 8 or 9 times, because many of these companies have that kind of debt to equity ratio, and that becomes very risky in terms of paying higher and higher interest cost. So if in any 1 year the revenue is not generated or there's some issue, then that directly affects the overall price of the shares. Interest coverage is highest for Bajaj Finance since it has the lowest debt compared to its equity at around 1.7 times, meaning it's basically what it means is its EBITDA, EBITDA EBITDA is more than 1.7 times higher than what it is paying as interest cost. Mahindra and Mahindra both and Aditya Birla at around 1.3 times. That is, the EBITDA is around 1.3 times higher than the interest it is paying. All of these three companies are doing well. It should be above 1 to 1.1, 1.2 times, or even if it's above 1.5 times, then that's very good. Promoter holding in all these three companies is high and above 50%. AB Capital is holding around 70% highest promoter holding in the group. None of these promoters have pledged any of their shares. Let us look at the foreign FII holding, DII holding, mutual fund holding. Bajaj Finance is holding around, for FIIs are holding around 21% in Bajaj Finance, 23% in M&M. We don't see a very high FII holding in Aditya Birla. Of course, many people tell me that if the promoters itself are holding 70%, how would the FIIs hold a huge stake? But if they want to, they can increase their stake, because DII is at around 12% in Aditya Birla, and mutual funds are holding around 1.5%. Of course, balance would be the public, which need to hold a minimum amount in the company. But of course, it doesn't matter that much if the promoters themselves are holding around 70%. But a good mixture of percentages is always advisable, like in Bajaj Finance, where 21% holding is by FIIs and 10% by DIIs, and mutual fund at around 7.3%. M&M has also a good mixture of promoter, foreign institutions and domestic institutions, as well as mutual funds. Debtors to sales ratio will skip this, because there are not that much debtors in these companies. Generally these are financial companies and they are not into trading. Dividend yield is highest for M&M at the current price at 3.1%, whereas Bajaj Finance is giving 0.3%. Aditya Birla hasn't given any dividend as such, at least to be comparable. Current ratio is highest for Bajaj Finance at 1.5, that is, its current assets are higher than its current liabilities at around 1.5, and therefore in quite a comfortable position in terms of paying its current liabilities or liabilities that may arise in the current year. M&M has seen quite a pressure. Aditya Birla has seen a much higher pressure in terms of it doesn't have that many assets to pay off the liabilities of the current year, and therefore may have to resort to higher debt or higher borrowings. Mahindra and Mahindra also has seen a 0.7, that is, its liabilities are more than its assets, and therefore there is a asset liability mismatch. So we have to be very careful in terms of looking at how much is the liability against the assets, or whether the NBFC or the company would be able to pay off its liabilities of the existing or within current 1 year by whatever assets it's holding. And if it cannot, then it has to resort to all different types of tricks and strategies to raise that capital, and therefore it becomes quite risky. So this is also a very important ratio to look at. Bajaj Finance has fallen quite a bit, as we saw earlier when we started the analysis, by around 30% or so, and to reach its 52-week highest point, today's date is 11th September when I'm analyzing this, and therefore based on the current price, the stock will need to go up 43.8% to reach its 52-week highest point. Mahindra has to go up almost 89%, and AB Capital at 68%. So the more it falls, the more it has to climb, higher it has to move up to reach its 52-week highest point. From its lowest point, it has recovered by 92%. Mahindra and Mahindra has recovered 70% and AB Capital has recovered almost 83%. In terms of returns, what is how much share or what is the profitability the shareholder can see if he had invested 1 year back, 3 years back, or 5 years back. These are the CAGR growth rates, that is compounding of the price or profits over 1 year, 3 years, and 5 years. This gives us a good idea as to how the shareholders' investments is compounding in each of these companies. So we see positive returns in Bajaj Finance for all the three different categories that we have. That is 1 year. From 1 year back, it's still in positive at least. From 3 years back, the prices have compounded at 21%. Every year, the share price has moved up by 21%. And in last 5 years, it has compounded by 46%. This is a very high growth rate of compounding. And therefore, we can see as we move on down below, we see that because of these type of numbers, this company is getting such a high valuation, and people are ready to pay a high valuation because the company is returning or generating that kind of returns for the shareholders. M&M has seen a negative from, in fact, in the last 1 year, if you had invested, you would have seen a 36% drop in your overall share price. From 3 years back, around 22% of drop, and in last 5 years, around 2.2% drop. So what this basically signifies is that the price is very near to where it was 5 years back. Aditya Birla is also exactly at its 5 years lowest point, whereas it has also given negative returns in last 1 year and in last 3 years of almost 29%. So both of these companies therefore are trading at a lower valuation because they have not generated for the shareholders. The balance sheet size, that is what is the current size of the balance sheet. Bajaj Finance balance sheet size is around 1,64,000 crores, Mahindra and Mahindra at around 81,000 crores, and AB Capital at around 1,13,000 crores. So all of these three companies are huge in terms of the balance sheet size. The debt holding out of this balance sheet size is 1,29,000 crores for Bajaj Finance, 65,000 crores for Mahindra and Mahindra, and 55,920 crores for AB Capital. The debt 3 years back, we can see how the debt has increased for all of these three companies. For Bajaj Finance, at least from 49,000 crores, it has increased quite substantially to 1,29,000. Whereas for Mahindra and Mahindra, it has increased from 40,000 crores to 65, and Aditya Birla from 33 to 55,000 crores. So all of these three companies have increased their overall debt or borrowings in the last 3 years. The total fixed assets or gross fixed assets is not that important for these three companies because they are not that substantial. Cash holding also, most of these companies wouldn't have a high cash holding position. And we'll skip the current capital work in progress. So this concludes my overall analysis of the Bajaj Finance with its peer group companies Mahindra and Mahindra and Aditya Birla Capital. Next we'll look at the technical chart as to where Bajaj Finance is, Mahindra and Mahindra is, and Aditya Birla based on the RSI and averages. We'll see where we can buy or decide to buy into these companies. What is a good level to enter into these companies? I have the Bajaj Finance technical chart. The correct time to enter into Bajaj Finance was somewhere in March 2020 exactly. This is basically a weekly chart, and the correct time to enter was approximately in fact here, when both the RSIs were below 35 at around 1,000 or 2,086 rupees on a closing basis. This is a weekly chart, as I mentioned. So this was the correct time when the RSI, both the RSI lines, went below 35. and the price was around 2086 as I mentioned. So this was the correct time to start buying into the company, either down or up. Although from this 2086 it didn't went down quite substantially down, but you could have started buying here. And even if I have drawn some support and resistance lines on the chart, the support and according to the support and resistance lines we can buy if it's going up. So from here, even if it had gone to 2000 from 2014 to 2003-14, then 2629 or 2630 rupees, and finally 2900 rupees. These were the good points, that good levels that we could have bought into this company. Now we need to wait patiently for the prices to come to these levels of 2900, 2630, 2315 or 2015 rupees, then 1590 rupees, 1170 rupees, and then finally 810 rupees. So these are the levels that we can consider for buying as and when it comes down again, or buy according to these support and resistance lines, or even look at when the RSI falls below line 30, or both of them fall below line 35. This is how I buy when the prices fall for good companies. We can average at these levels, but going up right now the current RSI is at 57 and 55 for both the lines, and therefore we should wait, only buy when it drops below 50 or below 35 or below 30, depending on how much what is your comfort zone and how fast you want to buy. So if you want to buy quickly, then you can buy below 50. If you have patience, you can wait for 35, and if you want to buy at extreme low valuations, then you have to wait for such a fall like COVID fall, where all the prices are dipped, where the prices have fallen like crazy, and that at that time you can take the opportunity. But for that we need to have a lot of patience, be in cash holding, put that cash in FD or something like that, like a liquid investment, so that when the time is appropriate we can put that money or shift that money into good companies like Bajaj Finance, TCS and so on, like very good companies where the opportunity was there. Maruti, many of these companies gave a good opportunity, but many people had already invested at the top and didn't have any cash, and therefore could not invest at these levels, or maybe they didn't knew about these levels and therefore never averaged at these levels. Also what happens is, in this kind of situation where the prices are falling like crazy, people don't have the courage or even the confidence to go ahead and make a buy in that particular moment when the whole thing is so negative, the situation is so negative, that you can't make a decision correctly as to when you should put your money in. You always think it will fall more, it will fall more, and every day you see this kind of falls, all these negative news throughout, and therefore making a decision is very difficult. So we'll never be able to exactly buy, even if when the RSI does fall below 35, at that time we'll always have this back of the mind, lot of news coming out for Bajaj Finance where they say that there is a lot of problems, moratorium, people will not be able to pay, people have lost their jobs, how there will be defaults, and so on and on and on. And therefore we'll always have this lack of confidence to go ahead and do our purchase. But even if we can't do it here, we can buy slightly a little higher at 2300, 2600 and so on, so that we don't lose these opportunities in these good companies. So this concludes my technical analysis of Bajaj Finance, and next we'll look at the fundamental intrinsic price calculation and see where we can buy into this company.